All right, good evening, peoples. I got the wrong screen pop up. So I see what it's doing. All right, let's go here and just show you what the Rex shares weekly payers for MicroStrategy underlying coin, Nvidia, and Tesla. So, and then I've got quite a deep dive in particularly the competitors in each category. So last time I just had Tesla and Nvidia. Now I added the MSTR competitors and the coin competitors and then a summary. So right now, MSII, the MicroStrategy from Rex, the weekly paid 25.69. The coin, COII, paid 27.36. The Nvidia from Rex equivalent, it paid 17.38, and we had the Tesla underlying Rex fund TSII paid 28.75. So let's jump in, starting with Nvidia. So over here, I sort of keep the competitors and their distribution payout. Some have been doing it longer. The reason this sheet I think is important is it allows us to take a look at a daily basis, because I'm going to tell you in my summary over here in competitors in all four categories who I think the winner is, who's performing better. But there's nothing like showing you a little bit of data here along the way. So we have Nvii, okay, from Rex. We have Nvidia from YieldMax. We have NVDW. That name changed from NVD or NVW. So just if you get confused there, that's a roundhill fund. So we're dealing with weeklies and a monthly, and NVYY from Granite is also a weekly. The reason you can tell they're weak, and then Nvidia pays no dividend. Sorry, guys. I coughed. All right, so the black and white, as a reminder, just indicates ex dividend. So we're halfway in the cycle, or a little bit less than halfway, around the 20th of July, 18th, somewhere in there. Nvidia will pay again, right? It last paid 6.7 So in some ways, unless the monthly just paid, it's unfair a little bit. So I don't draw an absolute conclusion, and they all have various start dates. I try to keep them, and as these newer funds get 3, 4 months under the wings, then I'll make the longer ones. I'll make Nvidia and Nvidia just go back that period of time. But right now, some of them are so new that I want to take Nvidia and Nvidia back 2 or 3 months, which NVDW does as well. And so then you're just caught with Nvii or Nvyy just being the new guys. But you'll see all that in the summary. But let's go with some up and down days that might stand out. So here for the Nvidia funds is a 4.33% move up. So we had Nvidia go from 147.9 to 154. So it's up 4.33. What did Nvyy do? Right? They're using leverage, but they're also selling puts. So I'm not sure that their income generation method is as good, but they should do well with their leverage. Well, I don't see it in the 0.63. And so again, sometimes it's a little confusing with these, but we have to assess it in an overall way, which we'll do when we go to the comparison sheet over here. It sums up everything. But you see NVW at Roundhill with their 125 leverage go 543. That's what you'd expect to see. Okay. And what did you see from Nvidia? Well, in a big up move, sometimes they get half. Once in a while, they get 70%. But when it's 3, 4%, they can't keep up. So they got a little less than half, right? 216.5, 2.16 would have been half. They didn't get there, which I always say they capture somewhere from a third up to 55%. Again, part of those spreads help. If they don't have spreads on and it's a 5, 8, 10%, they're going to capture around 35%, 38%. So it's just the nature of an income fund. And people tell, oh, Bruce, I'm so tired of hearing that the underlying outperforms. Well, ideally, guys, here's something you should think about. Do an 80-20, a 70-30. If you're really into it, a 50-50, and say, okay, I want to get income. You know, you guys tell me all the time, and I get it. Everybody loves income. I like it. Even when I don't need it all, I like it, but it's not my only method. I also love growth. And so maybe you do an 80-20 and you say, hey, with instead of dripping, you know, if you got the right underlying, you don't need to drip. Take that money and save up to buy the underlying because they do typically outperform. They're just not income oriented, right? And some astute people that have the time and energy say, hey, I'm only going to go with the underlying and I'll sell an occasional covered call or something. I'll take my own risk. And then, you know what I'll do is I additionally will just sell some shares. I'll trim my position on the way up. So I don't have an absolute. Obviously, I'm retired. I have more time, but I do put option strategies on my positions often, right? You've seen my how to buy Yomax, Misty, Pulte cheaply. Well, there's all kinds of ways you can just sell puts, right? You drop down at a lower price and you say, hey, you know, Misty's at $20. I'd love to get it at 18. Well, there's some strategies that you can try and do that even when it's not trading at 18. So you can look for those videos and other things. All right, let's continue on this path. So who else? So here's Nvii, the Rex fund, also using some leverage, 3.25. Not bad, but it didn't even cover what this one did. All right, so let's see a losing day. Here's 2.97, almost 3% loss. What did I get in the Granite? Sell put, use leverage on the underlying. I got roughly the same, slightly more. That's you expect it to have a little bit bigger loss if it's using leverage. But it sure didn't show me that it could go up more. Let's look at one more and I'll go back to those columns. Yeah, here's another one. 1.24. Well, you got to ignore when there's an ex-dividend involved. Here's one, 152 for Nvidia. 157, 259, 109. I don't get it. So something's not working there. Um, on for those of you that own it, you know, we'll look at the summary. The summary will tell us everything on how it's overall performing. All right. So which did I use here? Oh, I used the minus 297. Okay. Minus 317. Not a big deal. Look at a known leverage and it works on the upside. Yeah, it goes down a little more. That's exactly what I would expect. And look here, we didn't go down as well. Sorry, Nvidia didn't go down as much. And that happens, and actually a pretty good percentage. The old saying is normally these funds, you know, if you buy something and the underlying's in a bear cycle, and over the next 90 days it drops, you know, 40%, well, you're going to drop 90 or 95% of that. Why not 100? Because you're winning those weekly calls that are sold. So that gives you a little bit of income to offset not being down equivalent. But in general, I mean, the best you might get is 80 or 85%. You're going to go down. And that's why it's so important that people ignore, oh, I'm tired of NAV erosion. I get it. If you're getting an 80% yield and you got a 20% NAV erosion, you got a 60% annual winner. Nothing wrong with that. Ignore the 20%. But if you got one going down massively and you're making excuses, well, I'll catch up. It does have a pretty high yield. It would be like if elte didn't sort of fix itself. It's stabilized, it's still paying a high yield. It's good for now. The markets could change it where they just can't find that high IV, and all those high IV things are crashing with the market. Then you need a different strategy. But for now, it seems to have healed itself. But that takes a lot of work. It was always actively managed, Ulti, but it's actively managed itself into a pretty good situation. All right, continuing on this, I don't see anything else that stands out. So let's go over here and look at the Tesla's a nightmare, guys. It just, they say volatility's good. It helps a few more cents, but one thing that doesn't work, and I'll get into that. Oh, and by the way, I got a video coming out later after this. It might be a few hours. You'll probably see it your next morning because it's my morning already on Tuesday, your Monday evening. Um, how I said, don't buy Ybit, sell Ybit if you own it because there's much better performers. And that's all true. I've also got what I think is a good underknown about. Some of you may own it, not many do, and not many understand that it's in a bull cycle. It's a good time to buy. I'm going to come out. It happens to be a Yield Max um, ETF. So I'm going to do that video. A little balance. I hit you with one, don't own this one. And I'm going to hit you with one. I think you should own this one. Watch it, but probably over the 60 to 90 days, it's going to pay really well and it's going to perform really well. It's going to hold up on its NAV and it's going to, assuming that I'm correct on all my analysis. So watch it. That's coming out, guys. A little teaser for that. All right. So, problem with Tesla, as you guys see, it's just all over the place. Look at this. Up 497, down 5.34, up 8.23. Let's look at this one, right? So you got Tesla moving up 823. Who are our funds? Here we go with Granite. This is one of their longest yield boost funds. You got Curve in here, which is always generally known for holding its, not paying as much as Yield Max, but holding its underlying, right? Holding its NAV. Then you've got Roundhill, been in this game, and then you have Yield Max, and then you have Rex, right? Since this is kind of a Rex video, I have their four funds and then their competitors in those categories, and obviously you need to know what the underlying's doing. So let's look at the 823. Well, Granite, where's your leverage? 2.37. Okay, I got 3/4 of it with Curve. Good on you, Curve. Good on you. I got Roundhill with leverage. They don't have leverage here, but they write monthly calls, so they only have to win once a month. They don't have to win 4 times a month. You're going to collect more money at 4 times a month, but you got to win each of those. And so that's a mixed strategy. Sometimes Curve wins, sometimes Yield Max wins. But I like Curve. I wish they had more volume and I wish they went into crypto. When I interviewed their CEO, I asked him, this was over a year ago, are you moving? About a year ago, I said, are you moving into a, well, we're looking, but they're very conservative. I really like the CEO. I like what they're doing. I think Neos manages their options for them. Um, so they're a good company. I think they're very young. Hopefully they grow more and they get more volume in theirs. But it's not a bad situation. So 8% with the leverage, right? 8 on 8. Although that's not showing me any further leverage. Okay, Tesla, you did all right. Curve did 6.43, you did 5.53, but you pay more and typically in your. How about TSII using leverage? 7%. Okay. good on everybody. I don't see anybody except for Granite not getting the job done. And I hate knocking on yield boosts. There's some things I like about it. I also interviewed Will Ryan, the CEO. I like Will. I like what Granite's doing in some commodity spaces and all that. I'm just not sure who's doing their options for them and how well that income side is doing. They were slow to get yield boost out. They sort of took their time. They announced early. So let's see. All right, what else stands out, guys? Here's a 567, a 4 and a 5. Let's look at both. Well, granted, you're not getting it done. 168, 142, small percentage. Okay, curve, good on you. 90% here. 70% on this one. Good on them. Look at this. TSLW Roundhill. Yeah. You got your 125% leverage. It shows you fell off on this one, 455, and you only did 354. And Curve did 342 without leverage. All right, Tesla, how'd you do? Well, you got 80% of a big up move and you don't have leverage. Good on you on this one, Tesla. You also got, 75% here. So good on Tesla on this one. Again, part of the problem is here's where the fallacy is, and I'm going to explain to you guys. When you have a V-shaped recovery, and this happened to TSLY when it came out. When you are $300 on the underlying and it drops to 100, that's brutal, right? It just lost 2/3 of its value. Okay, you're going to go down 90% of that 2/3. And then guess what? If you race back up like a V bottom, you go 300, 100, and you stair step down, but it's still a pretty ugly downward move. And then you turn around and race up. I always say you take the stairs up, but you take the elevator down. So when it comes down, sometimes it's quickly and very, very fast. And when you go up, it typically isn't that fast. Sure, you can have a breakout pattern and have a bull flag breakout and have gaps, but that's the exception. So the problem is you took 90% on the way down, and then let's say that underlying just roars up. It's like a V bottom, right? Right back up quickly. Well, you only capture 35 or 40%. So that's what happened to Tesla. And that's what happens to some of these funds, even though you say, well, I'm bullish on the underlying. Well, it didn't matter. You can't keep up with the underlying. The idea that there would have been a case that when Tesla hit 100, yeah, you got your Tesla income fund, but go put 70% of your money, if you're really bullish, it's going to recovery in a non-income. I know somebody's going to say, but Bruce, I need the income. But I'm just telling you investing advice if you want to optimize what you do. So enough of that. Um, but I've seen these income funds. I've studied them. I know exactly how they work. I know exactly what the market condition they need. I know how they're going to operate. I understand the underlying. And that's why I do all this, because I kind of want to watch everybody that says they're going to do a certain thing and see if it shows up in the results, right? It's not what you tell me, show me, right? My father was born in Missouri. What do they call it? It's a show me state. So there you go. 8.23. Yeah, we talked about that one. How about a big down day? Let's look at the 6.79. Just happened, right? TSYY. Yeah, okay. Leverage is not hurting them. So they say they use a 2x underlying fund. Do they do it on every single one in yield boost? They sort of imply they do, but I'm not seeing it. So maybe they're not. But when the underlying goes up 5% and you go up 1%, you're not even doing what Tesla does and it has no leverage, right? So you got to get 35, 40%. You can't get 10 or 15%. I don't understand it. Again, I'll look at the summary. So down 6.79, down 502. It's understandable. You're not going down as much, right? That's at 80%. 718 here on curve. Now, why did you go down more than the underlying curve? I don't know. It's not much more, but it is more. Oh, here's leverage. Roundhill's showing us with 125%. That's how much more they went down. All right, how'd Tesla do? Well, they didn't do as good as Granite yield boost, but they did better. You know, you don't want to be 100%. So anywhere around 6.2, 6.3, 6.4%, that's what I'd expect. So this is good. Good on you. Now you got leverage over here again in TSII from Rex, and the leverage shows up. But I don't understand TSLP on this one. Just sharing, guys. How about this one? Here's a 534. All right, Granite, 80% down again. 80%. I'll take that all day long. Here's a 100% down. Not quite. So they did a little bit better, but that's pushing it. And what did Tesla do? A little bit better than that, but there's that 90, 95% down. Leverage took them down further. So you can see guys that use leverage in the bull market, they're going to outperform. All right, let's jump to the new ones that I added. All right, so I added MSTR for you guys. So here's our competitors. We got our underlying, we got Misty, the GOAT. You got IMST. What did they do? They came out and paid us 701, got everybody excited. Most smart people said, I'm going to watch it. And then they only paid us $1.08, $1.86, 1.866. There's our two payouts. Okay. What's Misty done? Well, Misty's had 4 payouts that were acceptable, but not that big, right? But it's not that priced as high. So all that gets taken in when I do my comparison. And then you got MSII, just paid up a new one. And then same thing here, MST just announced right after this roundhill. And I had this video ready and then I went in and threw in the 0.286 for MST. Super leverage. These guys will fly when MSTR flies. But in the meantime, you're going to have NAV erosion. And that's what they're showing me. They're not paying bad. All right, so let's take a look. Here's a 6.79 day. I'm making sure that that makes me why that's the same number that Tesla had. Did I copy? No. Okay, guys. My bad. When I see something like that, I know that I didn't do everything. Let me just fix MSTR. Sometimes I paste the old one and then I change and I forget to paste. Oh, come on. My internet's hanging up on the other. Okay, 395.67. That should have a pickup the price from somewhere. Oh, I didn't. Darn it. I have that in here, my Google Finance, and I didn't bring it over. That's annoying. So my bad here. Let me just put 2 in, 403.99. All right. The other ones won't be right, but that's all right. 402.28. I think all the other ones are okay, but oops, no, Misty looks wrong too. My bad, guys. Let me go do my Google Finance. Oh, when you copied it, it didn't put the formula in here. That's the problem. Okay, apologize. I copied everything over and then didn't fix it. These are right. My Koi is right. And my Coney is right. And my Coie, oh, sorry, I was in MSTR. What one's right? IMST is right. Misty is now right. But I'm not going to be able to use some of these older data. So apologize for that, guys. All right, but my summary data should be good because all I do is pick up distributions from over here, the pricing in my summary. All right, so I'm going to go to coin. I believe this is right. Yep, everything looks good here. COIW 5402. 3070. All right, so let's look at this one. I'll leave MSTR, I'll fix it, and I'll have it ready for you next time, but my comparisons will be valid. All right, so on Koi, look at this, guys. This is fascinating. Roundhill is just kicking booty. Remember when I was really upset and I'm doing my dailies on Coin? And I mean on Coney, and I came out and said, "Hey, they rolled on Monday. Oh yeah, but Jay told somebody in an interview that it stops at Friday. They don't count Monday, but they don't declare till they announce the declaration early Wednesday morning, so they decide Monday night. Well, but you don't take Monday into account. Well, it hurts you. It causes me and other people to move over to Koi at Roundhill. We're not short-sighted. We just that weekly thing. They're kicking butt 4 times while you're snoozing on coin. I mean, this thing has just flown. Look at this. This has gone from $37 on the 11th of June to $59 in the fund. Okay. What did you do with Coney? You went from 795 to 966. Yeah. But you didn't pay anywhere near what they paid. So you got to do better. You stiffed us on that, and who knows if that money will be in Coney on the everybody's, oh yeah, but Bruce said all that money will be there. No, not necessarily, guys. It doesn't work that way. The money is sitting there, but there's times that just like with Misty lately, they've been paying money they didn't really have. I mean, they have it, but they didn't earn it. And the funds will do that. They'll try and pay the IV or they'll borrow and people get in and bad. Oh, you're just returning your money, people. Well, sort of, but ROC is complicated. There's all kinds of looking at it. But if you just want to be negative and say it's returning what you paid for the shares, yeah, but you can also look at the house money stats on Misty, and it's the best fund by far. So those arguments don't really hold water. All right, so let's get into the Koi stuff, and let's take a look at some. Here's a 570 price change in coin. What did Koi do? 725. What did Coney do? 445. Couldn't keep up. I wouldn't expect it to. What did COII, right, from Rex? They got leverage. Koi's got leverage, and they both beat them. Okay, how about on a down day, down 433? Okay, the leverage hurt them a little more. Leverage hurt them a little more. Leverage didn't hurt them as much, but they went down 95%. So I'll take it if you believe in the positive, right? And that's about what you're going to get on these funds. They're behaving exactly as I'd expect. Here's a 577 down day. Oh, let's go grab one of these. Oh, yeah. Sorry, guys. I mean, we already did this one. This one isn't going to vary radically either. All right. So a 1210 up day on the 24th. Well, we got 14 out of Koi, which makes it a wonderful fund because Coney got 50%. That's even decent. I like I said, sometimes it only goes 35, 40 on that. But that's about 52, 53%. But look at this, baby. Oh, yeah. You got 125%. It matters. Even this one. Not as much. It didn't perform for having some leverage. It's not showing me that it can keep up with Koi. Look at this. Because you had, I mean, coin, we all know being added to the S&P 500, being named with the, what was it, the Senate Act or whatever around, some coinage and some issues. And I can't even think all the terminology at the moment. But look at this, 19%. Can't keep up. Don't expect you can. Can't really keep up, although you say you have more leverage. But boy, you're showing me something here. So we need to go get to the summaries, guys. I've been long in the tooth on this. I'm going to jump right to the coin one because that sounds exciting. Look at this. You can't even show the numbers. They're so. Now, here's part of the problem. Why? It's 5-2. So it's only 27 days. What is wrong with that picture? Let me see something. Equals. It doesn't sound right. Again, when I copy, yeah, I didn't think it sounded okay. Better. Everybody else, I think. See, when I copy this over from my Excel and put it over here, it doesn't bring any of the formulas. And normally I fix it, and then if I forget to fix it, that's the trap I run into. So it's not like, let's just do this one. And it didn't change much. Oh, because I made these use 5-2. Let's make sure that I only took distributions from that on 5-2. No, I think I took longer on that. God darn it. No, I think 5-2. I did. So let's go with it. Again, guys, it's as you can imagine, it's a lot of work when you copy stuff over. So no distributions. What do we have here? Is this the right price for coin? I imagine it is. So coin would have gone way up, but let's just verify. I'm looking at my second monitor for 5-2. 204.93. Okay. And it's 357.10. That's all correct. Let's take a look at Coney and make sure that I'm working on 5-2 data. 740. Oh, there's the problem right there. That's a big. Let's take a look. $743, $913. Distro. Is the days right? Yeah, I'm 67, 67, 34. I made these on purpose a little bit shorter in here. Let's go look at Koi and get the right, if that's the 5-2 price. And the 5-2 price is 32.25. And COII should have a 6-4 price. 24.78. Okay, it looks good. So we've got our distros on coin. So you can see here, this is just coin itself is outrageous, right? But with Koi being doing well, it's almost keeping up with that. So it's not going to outpay everybody because look at this. Yield Max still outpays them slightly because remember, their stock is priced cheap. They're a $53, $54 stock. This is a $9 stock. So even though it's $1.27, it's relative. So they're paying 93.12 annualized dividend. But look at the gain loss. So everybody's up on this. I wanted to get these closer because if I take these back to like 219 when Coii started or something, then we're trading in different times. So I want to get them as close as I can without just making them all 6.4. So I got 67 days. So this guy can't really win because he doesn't have a fair chance, but he's had a lot of the big up move. So that's what I got for you right now. Coii is winning this, the round hill. And coin doesn't count, right? We're not sitting here saying buy that. Although if you want to buy a percentage of it. All right, so let's move to these guys. I think I've got it. Is this the right price? I'm going to double check these just to make sure. I know my first two are good. Yep, 25.26, that's right. 1771, that looks right. Misty, is that? Nope, that's not Misty's. Oh, that's prior week. 2065 is good. 2448 is good. 395 and 318 is good. Okay, so IMST wins this 90%. Beat the underlying. Well, a lot of it, two things to play. First off, this is a case of where I am using 219. So I think come next week, I may move these up and put them the same as IMST. So it's not completely fair. If something booms in 1 month, then it's not fair to look at a fund over 3 months when another fund launched in that perfect timing for the month. So I understand that, guys. And that's why I'm commenting on it. So don't run out and say IMST is a winner. A lot of you are saying, I want to watch it. I don't blame you. But it is doing well. And what distinguishes it in this month is not in its annualized dividend. Again, Misty's beating it, the GOAT's beating it. But look at MST, so's MST for that matter. But look what's happened to MST as I talked about the NAV, right? It's using that leverage, and MSTR is not always going up, especially in these later periods. So you got a June launch, a May launch, and an April launch. And then you got 2 February. So you're not dealing exactly with apples to apples. All right. So enough on that, guys. You pick them, right? I'm not going to tell you here. All right, Tesla, horrible altogether. Let's see, TSYY. Huh? What? And again, mostly we got 219s. Everybody's 219 except for TSII from Rex because that's when they launch, right? They launch 6.4 on all their stuff. But you're not that far off, right? So the 6.4 guys got a total return of minus 41, one of the worst return. Well, Tesla's worse. So to me, the winner here is Tesla because it's gone down the least. And part of that it's paying, well, it's not. TSYY is outpaying it. Percentage 58 to 51. But what's TSYY doing? It's going down more, right? Tesla's only, oh, let's get over here. Where's the gain loss raw number? Here we go. 40% on Round Hill, 12% on Rex, but again, a very short period of time, not that competitive. Tesla and TSYY. Again, these guys, TSYY is becoming the NAV erosion king. So Tesla wins this one, guys. All right, let's look up here at Nvidia. Again, you got a new starter, right? 528, not really fair. Everybody else, well, you got a 513 and a 528. Here's yield boost at Granite sticking their head saying, hey, look at me. Well, let's see. We got a 56-day period and we got a 30, oh, is that 34-day period good? I'm gonna make sure. 41 days. Yeah, it's close enough. Little fine tune. Doesn't change anything radically. So to me, this one is winning, but it doesn't have enough track record. It's winning mainly on the gain loss because what's Nvidia done over the last 60 days? It's done a V bottom, right? It went down and it's roared back up or slightly above where it started from. So Nvidia has a hard time keeping up with that. It cannot capture that period, and especially where it goes in the down period and then it roars back, say from April through the end of June, it can't capture it. So even Nvidia is only showing a 39% gain over this period because it went down a significant amount because this is near the former high. Then you had a 2-month decline into April and a 2-month run back up to where it started. So you still have a gain. This one, because it's 513, it's only seen up movement. So it pays well, we know that. And it's also got a gain, but a lot of it has to do with the 513, just like the gain over here. But everybody at 219, well, not everybody, NVDW, right? The round hill, they dropped, right? This 219, but they're beating Nvidia during that period. So when those two competitors, round hill's slightly beating Nvidia. Nvii, it's just because of the timing is killing it. It had the whole month of June, which was a big part of that up move. So again, guys, I give you as much as I can to explain it all. And that's why I've got another big database, if you will, that I'm putting all kinds of income funds. I want to get up to about 200. And I've got them broken down by category and underlying or index. And I'm constantly looking at the data. That's how I spotted something trending in YieldMax over the last month or so. And I want to get in that fund and I want to educate you guys. All right, this is long-winded, but a lot of analysis, a lot of good data. All right, guys, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Wanted to get out the Rex update. So let's go, people. Have a great rest of the week, and I'll say bye for now.